Very good evening and welcome to Capital Connection, where we join the dots to give you the big picture for business in Africa. I'm Arnold, Segawa. On the agenda, our panel of experts will discuss the impact of climate change and what it is having on African economies, not forgetting how it could shape the nature of business and the future on the continent. In the commodity corner, the focus is on one of Africa's staple foods, maize. First, though, Judge Raymond Zondo kicked off the state-captured judicial hearing and inquiry today to scrutinize allegations that hundreds of billions of rands were stolen from the public purse under the watch of the former South African President Jacob Zuma. Heavily implicated in the grand-scale theft are the Gupta family. The family were close to the former president and left in a hurry to Dubai after President Zuma then lost the South African presidency to Cyril Ramaphosa. This was earlier this year. I got a chance to speak to our CNBC Africa's reporter, Aviwa Mtila, at the commission being held in Parktown, Johannesburg. Aviwa, there are already hundreds of thousands of leaked emails in the public domain detailing the extent of the theft under the public funds, of course. What exactly do we expect from this inquiry?
Well, Arnold, this is the inquiry that has been on everyone's lips in South Africa for over a year now. It has been anticipated. That is, of course, the Commission of Inquiry into the allegations of state capture. That is the business dealings that involve politics and corruption, and especially under the tenure of President Jacob Zuma. It has, of course, kicked off today with the first day starting off today here in Parktown, Johannesburg. We've seen the lawyers come forward that were representing the advocates, representing AJ Gupta, representing the president, and represented a former public enterprise minister, Len Brown, also come in here saying that they don't want to disturb the proceedings here, but they do want to be included in the processions that are happening here. They want to be able to be given the opportunity to cross-examine witnesses as well that will be standing up. Of course, in the witness list that we're expecting here is among them the former finance minister of South Africa, Mcebisi Jonas, who of course came out saying that he was offered a bribe by the notorious Gupta family. That bribe was an alarming 600 million rands, according to him. Also, we're expecting Ms. Mentor to come forward here, also one of the ANC veterans, former ANC veterans, to come forward and speak out on allegations of state capture. The big question is whether all of this submissions and the commission itself will yield any tangible results. Because I've spoken to a number of people on the sidelines of the inquiry. They say that they worry that the people that are going to gain here essentially are the lawyers. Other than that, no one will actually be held accountable criminally. They're saying that it's going to drag on for the next 2 years without accountability. So time will tell whether this first day will and the proceedings going forward will actually yield something here in Johannesburg, Arnold.
Many thanks for that, Aviwa. Now moving on to Rwanda, a bilateral air service agreement between the governments of Rwanda and Italy was signed today. Michael Mugisha joins us from Kigali. Michael, what does this mean for Rwanda?
Hi Arnold, it's true the agreement has been signed, and it's not the first one of its kind, but it's one of the few that the country has signed with a European country. Now, Rwanda's Minister of Infrastructure, Clava Gatete, and Ambassador of Italian Republic to Rwanda, Domenico Fornara, who signed on behalf of their respective countries, had this to say.
This bilateral agreement is very, very important. It allows us the rights to fly to Italy, and also give them the right to fly to Rwanda. And this definitely would facilitate a lot of bilateral cooperation in terms of more tourists coming from Italy coming to Rwanda, in terms of facilitating trade and also investment. And this is really very, very important for us, given that Italy is one of the top countries that we are considering that we give priority in terms of further cooperation in Europe. They have been very much involved. The private sector involvement has been quite great. They are in construction, they are in IT. They are also working with other areas, including our security institutions. And we believe that this relationship can increase further, but and that could enhance the trade between the two countries. The first thing is to have this kind of air transport, which would allow the people to travel back and forth so that they can explore the opportunities that we have here in Rwanda.
Rwanda is one of the first and is one of the most interesting markets and partner countries that we are looking at. The bilateral relations in the last 2-3 years we're already starting from a very excellent level, but are even further boosting in many different areas, namely in tourism, information technology, services, construction materials. Of course, we are very much interested to many products that come from Rwanda, from the agricultural sector. So this kind of agreement creates that legal framework that is necessary in order to allow all the technical and private partners then to talk and to more easily, let's say, trade amongst themselves.
Michael, this is definitely very promising. Tell me, what does Rwanda stand to benefit from this particular one? And Italy, of course.
Well, Rwanda has signed over 70 bilateral air service agreements with different countries across the globe, and up to 40 of them were signed just this particular year. And this aligns with its vision of becoming the regional aviation hub. But for this particular agreement, the country is looking at boosting its cooperation with Italy, especially in trade, ICT, and security. Now, on the other hand, Italy also considers Rwanda an emerging market that can be a gateway to the region. Now, this agreement, coming back to it, was negotiated and agreed upon in Colombo, Sri Lanka, just last year in December, and it's a legal framework that creates all the basis on which technical levels can work without further engaging political organization. Now, here's what we're looking at. Regulation of frequency and capacity of air services between the two countries, pricing and other commercial aspects. Now, the agreement signed will also allow national carrier, that is Rwanda Air, of course, to operate air services to Italy, but also will allow Italy's commercial airlines to operate in Rwanda without any sort or form of restrictions.
Now, maize is a staple food for many parts of Africa, but it also has many other uses, from being a key ingredient for biofuels through the continent and, of course, being a means through which animals are fed across Africa. Capital Connection's correspondent Nazi Zote spoke to an agricultural economist, Cons Moraba, about the commodities prospects. Take a look.
Consi, thank you so much for coming on to Capital Connection tonight.
Thank you so much for having me, Anazi.
Well, let's talk about maize. So considering the fueled food prices in 2016, which hiked the price of maize, how is maize looking now currently?
Anazi, if I can start, like South Africa has an average annual, long-term rainfall of around 480 millimeters compared to internationally, which is around just less than 1,000 millimeters. During that drought year in 2016, our producers were just so resilient and they managed to produce during a drought. The following year we had abundant crop, and that is because they adapted their technologies. They knew how to manage their production risk. They know the best cultivars that they wanted to use, and they've adapted them over time. So that's why in 2016 we saw that it wasn't above average rain, but the rain we got after they have put things into place. Our maize went to 16.8 million tons that was produced. And as you can see, since 2016, there was a large crop. Our exports were not as high as we would have anticipated them to be. And stocks are still very much around. In silos, grain storage is still not to full capacity, but we have large crops. This year, there's an estimate of around 13.2 million tons. With that carryover stock from the previous season, this season's large crop, the market is basically right now characterized by large stocks. In silos, deliveries are still actually coming through. We're expecting more deliveries to actually pick up in August because we had a late harvest this season. So there's a lot of maize in stock. There's a lot of maize supply currently locally. So maize prices are expected to be actually relatively low in the medium term. That's 2018, 2019. We do not anticipate any hike anytime soon.
And you're right, this year's harvest was quite low compared to the previous year. What are the external factors that caused that decrease in yield?
because the industry struggled to export as much as they would have loved to, hence we have so much carryover stocks, some producers did decide, to plant less maize this season, and that's why we have reduced crop size. And there was also, a late planting season, it rained late, so some producers planted soybeans instead of maize, and that's why you see the lower crop. And also now we saw that going into winter, spring, weather forecasts indicating that there might be an El Nino development coming through. So we're actually expecting that maybe there might be even a lower crop next year.
Wow. And tell us what kind of external factors, I know maybe drought is one, but what influences the mid to long-term prices for maize?
It is our fluctuating exchange rate. So right now the market prices are being supported by what is happening in the US. So US maize prices are higher, and that is supporting our local maize price. Our weather, international weather, whatever weather abnormality is happening currently in South Africa, it will reflect on how, when, and how much they plant, and that size will also influence the amount of maize we have.
Many thanks for that, Nazi. Now, coming up after the break, we discuss climate change and its impact on African economies, not forgetting many livelihoods. Welcome back to Capital Connection. Now, changing weather patterns throughout the world are unleashing havoc. At least 97% of climate scientists believe that this is a result of man-made change. Joining us to discuss the impact of climate change on African economies is South African Institute of International Affairs senior researcher and governance of Africa's resource program, Romy Chevallier, and she's joining us via telephone in Kigali. We do have Charles Karangwa, and he is the Eastern and Southern Africa Regional Coordinator for the International Union for Conservation and of Nature Forest Restoration Program. Let me start with you, Charles. Do you get the sense that this can be business as usual?
Allow me to definitely confirm that climate change is real and is happening now. If you look at the global surface temperature, definitely has increased, and this is affecting many sectors of life. And people tend to think actually climate change is a conservation problem, but it's actually rather a socio-economic problem as well, affecting all different sectors of our life, including the energy, food systems, and water, and as well as the health problem. So this is not business as usual. We need to be aware climate change is real and it's happening, and we need to take actions.
Right, let me bring Romy into the picture here. There's lots of talk about the most affected are actually going to be in many of these developing countries, the most affected, of course, by climate change. We're talking sub-Saharan Africa, maybe some parts of East Asia. Given the research and the literature that's out there, can you confirm or deny this?
Hi, good afternoon. Absolutely can confirm this, that obviously as we see major impacts happening across the world and in different regions, as the previous speaker mentioned, it's going to affect every country differently and each economic sector differently. But there's certainly massive socio-economic impact. And we find developing countries that already have development talent on board are going to find that a lot of their challenges are absolutely exacerbated by climate change. You'll see this, for example, in the water sector, where suddenly there's no availability of water, or the quality of water deteriorates. Or in the infrastructure sector, where projects are starting to be affected by sea level rise or massive weather event occurrences. In the health sector, as mentioned previously, you'll see the spread of vector-borne diseases in areas that might not have been previously affected, et cetera, et cetera. So the difficulties that are already being seen in developing countries will be exacerbated by these changes.
Charles, let me bring you back into the picture here. Do you get the sense that the governments are actually doing enough here? Because it's one thing to actually talk about climate change. The literature comes out, researchers come to the table, they present you with all this evidence. But many people, do you get the sense that they are putting this in the back seat? Well, it's not affecting my generation.
Yeah, I mean, that's a good question. But obviously, we tend to think the governments can provide solutions to everything. But in fact, it should be the other way around. Everyone, governments, but also other investors and other, business owners, etc., needs to take action. And obviously, government needs to put in place efficient policies. And we have actually very well written policies, if you want, in Africa. You have been across different parts of Africa, from west to south and northern Africa. So they are always very good policies. But as you mentioned, we write good policies, then we put them somewhere in the shelves, and implementing them becomes a problem. But also, we need to be aware, again, Africa is just contributing 4% of the greenhouse emission. And the question is how much we are suffering from this. So it's not only Africa, because we are, yes, contributing 4%. Remember, the 96% remaining is from other parts of the world. We can take actions, we can put in place good policies, but still, we are only contributing 4%. So adaptation still remain a very important element of this discussion. Africa just to adapt on what we are not necessarily creating. And that's where actually we need to think even this in a global context, beyond Africa, beyond our governments, but also other investors and business owners. Everyone really needs to take action to this particular problem.
Romy, let me throw you back in here. The fascinating stat there from Charles mentioning that Africa is just contributing a mere 4%. On the business end, is it time to maybe readjust some of the policies that have been put forward, at least for the businesses? And I say this in regard to the carbon credits.
Well, it's an interesting thing. So, as Charles mentioned, the relevance of South Africa's contribution is one of justice. Sorry, first of all, it's to say that obviously we haven't contributed to as much as the rest of the world to accumulated greenhouse gas emissions, but we're seeing the impact, and we will continue seeing the impact as long as the state of climate change continues to get worse. So, on the one side, there's that, but I feel that given the fact that everything needs to change, so climate change adaptation and resilience, community resilience needs to be built in across all sectors. So yes, it needs to be built in the private sector. So you mentioned carbon credits. Carbon credits is one way where there's essentially an exchange where you can trade your accumulated carbon for a renewable investment project, for example. But I think fundamentally there needs to be a complete change of the way that we do things. So carbon should be reduced fundamentally across the board. So yes, you can, there is a debate around whether there should be an exchange of credits, but I would argue that there should actually be a reduction across the board of carbon formally. So, and that's everything from the way that our formal economies and our energy, that's the way that we structure our economies, but everything from the way that we do, the way that we put investment in place to look after responsible projects that have looked at climate adaptation as part of a principal starting point. So essentially, I would say that every project at every level, and also at the citizen level, needs to take resilience into account and rethink the way that we do things, because nothing will be the same. And we need to start thinking about protecting our industry, protecting our communities, protecting our economies against something that is inevitable.
Right, Charles, if you maybe want to top up on this one.
Exactly. I just wanted to add on what she rightly said, and I think things need to change. That needs to really be the way to go, because the principle of polluter pay does mean I will continue polluting, I will continue emitting carbon and the other greenhouse gases, etc., and then I will just pay to those communities, and that's not actually what we should be encouraging. I think things need to change from manufacturing to other sectors of life, from energy, and adapt to really renewable energies and from built infrastructure, try to really take conscious of natural infrastructure systems, which we are actually losing. We are seeing a lot of building infrastructures and the roads and all the type of really very hot towers, etc. But the question is, how much are we investing in natural infrastructure that at the end of the day is helping us to adapt to these changes? So I rightly agree with my colleague here that the change needs to happen, and the principle of paying needs to be rethought, simply because we can't continue polluting with the basis that we are going to pay. Simply when you look into the health systems, the study shows that the medical bills for Africa is going to increase up to 14% in the coming 15 years, mainly because of pollution, air pollution, asthma are going to increase, and other respiratory disease. So who is going to take those bills? Is the polluter pay principle of paying for carbon going to do that? I don't think so. So we need really to think systematically, how do we change the way investments are being done?
Right. This is very fascinating, and I want to bring Romy back into the picture here. He's touched on some very pertinent points, but we're looking at a continent that is looking to industrialize and talking about a fourth industrial revolution, talking about bridging that infrastructure gap. How do we achieve all of this and not actually cut out the carbon in the picture?
Yeah, so the one debate is around the use of carbon and efficiency measures that can be put in place to retrofit coal-fired plants and that discussion. And the other is making sure our communities are resilient. So the adaptation side of things, it's obviously, it needs to respond directly to what's going on in the carbon space, but they are very different. So making an economy resilient to climate change is exactly what Charles was saying, is rethinking the way that you're doing things, making sure that you are reducing carbon, et cetera, but that you're putting measures in place to make sure that the vulnerable people in the communities and economies are protected against the impacts of climate change. And the one side of things, so yes, is being very aware of what your energy, because generally it is the energy systems that are responsible for emissions. So on the one side, it's being very aware of what your economic trajectories look like and looking at measures to make your carbon measures more efficient and put technology, et cetera, in place to respond to reducing measures. And what countries have done at the moment is that they've actually put mitigation measures in place to talk about the actions that they are going to put in place over the near period to reduce those carbon emissions. So the one side is making sure that the governments look at transport, look at the energy sectors, and make sure that we hold our governments to account in terms of what they are committing to. And there is investment and there is technology in place in order to assist countries to get there. And then the other side is to look at the adaptation side and look at what, I agree with the previous speaker, Charles was saying, is what natural capital do we have in our countries that we can utilize to address this problem. And the one thing is, for example, in the forestry sector or the coastal ecosystems area in which I work, mangrove forests, tropical rainforests, they absorb carbon dioxide. So they store carbon dioxide as long as we keep them in the ground and we conserve them and manage them properly. And the other thing is that they produce a barrier to protect our vulnerable communities. So that, for example, is if we can make sure that we manage our natural infrastructure correctly and we put conservation areas in place to protect our natural infrastructure, that would be a perfect response to manage both the mitigation and adaptation side of climate change at a national level.
Many thanks for that, Romy. I'm afraid that's all the time that we did have. Thank you to my guests. Be sure to join us again for Capital Connection next Wednesday. That's, of course, at 6:30 p.m. Central African Time. Have a good night.